Good afternoon, greater Philadelphia area. This is Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Stacey Mitchell. She's Sarah Tymon. We've got Nick behind the camera, and we all work at the Tom Toole Sales Group at RE/MAX Mainline, the number one RE/MAX team in Pennsylvania since 2018, number 11 in the country. And it's been kind of a nice, stable week of economic data here on Toole Time Real Estate Radio. We're going to break it all down. You want to follow us? We're live every single week on Facebook, YouTube, and Instagram. Just look up Tom Toole Sales Group. And ladies, to me, this has been like what I think a lot of people have been waiting for. The market's reacted favorably in that things are kind of the same as they have been the past couple weeks. It's something we haven't been used to, really, I would say, since like the spring of last year. And where I'm going with this is that we saw inventory increase for the second week in a row nationally. It was up just over 8,000 units again for the second straight week. It was 8,260 to be exact. Anything on the plus side is a positive right now. In my view, we saw purchase application data, meaning people going under contract and filing a mortgage application, was up 5% week over week. And mortgage rates, they've stabilized, still kind of bounce around from 6 1/8 to about 6 1/2. So what's the consumer saying? What are you guys seeing? What's your reaction to all of this? Kind of nice stability, spring market sort of normalness here.
Yeah, I mean, it's been nice being able to, the interest rates has been great. I have had a couple clients now. I know last week we were talking about the changes, and I know we're going to be talking about that later on in the segment. I have had a couple clients now bring that up, but the fact that there is stability in the rates has been a great thing to be able to touch on.
Yeah, it's super positive because people aren't, they're not seeing the up and down roller coaster. So I feel that my clients are in a better headspace with, the interest rates leveling out and being stable, not bouncing around all over the place, because that does feed uncertainty. And people don't like that. People want some consistency. So them being more comfortable, they're definitely interested in getting out there and looking at homes. And with the increased inventory, that's the best news yet.
Yeah.
Well, and you bring up a good point, Sarah. So what Sarah mentioned, just the changes, we're going to talk about the LLPA changes. So it's a sort of complex thing that's been going on with some clickbaity news. We're going to cover that all in the second segment because it deserves that much attention. And in my view, it's they probably did a pretty bad job explaining this, and some horrible reporting happened. So we're going to talk about what's going on there. But before we get into that, I just want to talk about the market. So to your point, Stace, we're seeing inventory rise up a little bit. And we just literally had our monthly team-wide meeting about what's going on in the market. And through the month of April, we saw the month's supply of inventory in the greater Philadelphia areas at a 2.7 month supply. And you compare that to last year where it was only a 1.9 month supply. That's up 42.1%. And even just the number of homes available is up close to 5% year over year just in our marketplace through the month of April, which was just a couple days ago. And that's been the number one biggest complaint for home buyers out there and sellers because they need a place to go. And the other issue for sellers is all this volatility with rates. I mean, a couple months ago, we were at like 7+. And you think about the challenge sellers have. They've got these 3 or 4% mortgage rates. That's about 65% of people in the country. And they've made the decision, hey, we're going to go buy another home. And we're okay with the rate in the 6s. But wait, they're so volatile. Rates just jumped up a point. We haven't found a new home yet. This stability, to me, will unlock inventory. And we are going to see a very busy summer market, a very busy fall market, because it's going to normalize even more. The pace might slow down a little bit. I've already seen it slow down a little bit, even though there's a lot of multiple offer situations out there, and I want to get your take on this. We're not seeing like 15 offers. We're seeing like 5. And some of the higher price homes, there's none, and there's even less competition for those. And things will probably be competitive over the next 6, 7, 8 weeks here. I'm telling you right now, we were just talking about this when Sarah was rushing from I-76 to get here.
Yep.
And we talked about this at our team meeting today, that the second half of 2021, we saw a lot of people be able to transact And the reason for that was the market, it chilled a little bit. And I'm clear we're going to see the same thing happen this year with this newfound market stability. What are you seeing in the field right now?
I think the prices are going to be stabilizing too. I mean, you're right, Tom. There is still multiple offer situations, but I don't see where it is 12 to 15 offers. So you're dealing with less competition. So there's 5 to 7 offers. So I think that that's very helpful. But I do believe that, every house is different. Every situation's different. Some homes do go well above asking price. But on average, I think that the home prices have stabilized for the most part, that's great for the consumers also, because they want to see that too. I mean, they have been skyrocketing over the past couple of years, and including the rental rates too. So, and I think we're seeing that level out also. So this is all very positive, welcome news. It's going to help the consumers make, better decisions and be able to move forward with what they want to do as far as getting them out of leases, getting them into their homes, or if they want to, if they're considering downsizing or upsizing, they're going to be able to make that happen.
Yeah. I mean, I think I know there was an offer that I put in over the weekend for a house that I knew would go. There was a lot of activity. I'm also there's now there's so many overlapping appointments. You're kind of able to scope out and kind of hear what other people are saying when you're out at the showings. There was such a long time there where it was not only was it only a showing window for you, a lot of homes were having 15 or 30 minute gaps between showings just to ensure that there was zero overlap, right? So for this particular one, I mean, while we were in there were probably 4 other groups going through, and ultimately our offer was not enough to beat out, but it was only 6 offers for all of that activity, which just kind of goes to show that, if you want the home, go for it. You might not be competing against as many people as you thought. So that's certainly there. But then also, if you don't get one, or if you are looking for a certain type of property, and decide to pass on something that pops up, I am seeing at a quicker pace more homes that pop up that you can go and tour and take a look at. Whereas depending on the property, I mean, there were times there where it could be a good bit in between houses.
Yeah, a couple of weeks, 3 weeks, a month, and you're trying to make sure that the clients are still engaged,
right?
In the process, because if it goes that far between when there's something viable for them, right, it's frustrating, and they can be demoralized. But to your point about all the activity on at the showings, that's a deterrent right there.
Right.
If you have clients that you're taking in and they're looking around and, it's like ants crawling, right? They're like, oh, no, we don't even stand a chance.
Yeah.
No. Exactly to the point. Yep. You have to put the offer in then, because there's going to be people that feel that way and they're going to drop off.
Right.
So
and I've absolutely given that advice before. Listen, people may be hesitant to even put something in because they just assume, given the activity here, that they don't have a shot, go in with a strong offer for sure. But, the only way that you've got a shot is by putting an offer in. You don't put in an offer, then the worst that can happen is they say no if you put something in that doesn't get accepted.
Yep.
Well, and this is where it's so important to have someone actually explain to you what's going on, because there's people they play things out. They see 10 showings outside, or they see a bunch of cars parked and they're like, oh, multiple offers, we're not going to get it. You have no idea. You don't know. And agents are probably more guilty of this than consumers. The consumer, it's okay for them to not know things. That's why they come to a real estate agent. The agents that automatically play out hey, this home's not going to be available if you want to go see it in a week, or there's going to be multiple offers. I can tell you that's going to be the case. You got to give real facts and real data, and that's something that agents are they've been conditioned not to do their preparation work because the market moves so fast, and that's why a lot of folks are having a little bit of a hard time right now. So the positivity here is we're seeing prices appreciate at a normal rate. Stacey, you hit on that. I mean, we're talking 5% year over year. That's a nice, normal home value appreciation. That's not anything bananas. It's not that 10% plus that we were seeing. We're seeing inventory has come up a bit, still not anywhere close to the 6-month supply. And let's be really clear, Philadelphia is weighing that number up. The city of Philadelphia has a much higher supply than the suburban markets. So those are just some things that are happening right now. And on top of all this, then you've got the Fed meeting coming up. And, we've seen rates kind of bounce a little higher, closer to the 6.5% range in anticipation of this meeting. People are getting worried about this. So what is your take on what the Fed is going to do this week? It's coming up in 2 days. Everybody's talking about it. Where do you think rates go? And what advice do you have for people that are out there thinking about transacting in the next 6 months, worried about the Fed?
Well, I think that the mortgage interest rates that we see now are going to remain very steady. I believe that the Fed is definitely going to raise the basis point, at least 2.5%. That's a sure thing. They're still laser focused on 2% inflation rate and the unemployment rate. So I think until they get closer to those numbers, they're going to continue their, increasing their basis points. But on the other side of it, there was another bank failure that we probably should play into the equation here, because with all these rate hikes, it does affect things. It might not affect the mortgage interest rates at this point, but it is affecting things. So, they keep trying to affect the market, and they are. So they're, these rate hikes are definitely playing a part in the bank failures, which is, kind of scary. It's like, when will the Fed be happy? Because I don't believe that they're going to see the 2% inflation rate. I don't see that. The unemployment rate, I don't know. It's at an all-time low now, right? Wasn't the last report at an all-time low?
Yes.
So that's not even working in their favor.
Yeah, I mean, my advice for clients, I mean, in terms of what's going to happen here later this week with the rate hike, I mean, I think we're already planning on that. I don't think it's going to have a dramatic effect on what they're currently seeing on the rates. As far as if somebody's saying, I want to see how this all plays out over the next 6 months. My advice there, I mean, I guess I would just want to ask some follow-up questions. Like, what do you think this is going to look like 6 months from now? Mm-hmm. I mean, one, experts are all the time changing their predictions. So, you can't totally rely on what they're saying. And 6 months is a lot of time for a lot of things to happen. Like, look what's happened over the last 6 months, So, I would, depending on motivation for the move and for wanting to purchase, just kind of focus on that and continue to get out there and see if we find the house that works with the numbers.
Yeah. You do pay attention to what you can control.
Right.
Because there's so many things that you can't control. Right. And to be focused on that, it really, you can do more damage to yourself than anything.
Absolutely.
You bring up a good point that, people don't move because of rates or market conditions. They move because of life events historically. Now, some people will take advantage of market conditions. We saw that happen in 2020 to 2022 because rates came down so low. People had some additional disposable income because they weren't allowed to do anything. I think COVID's officially over now. I hear? Is this true? Next,
yes.
Still.
Woohoo!
Great.
I think it's the 8th.
3 years later.
We should have a party that day or something.
Yeah.
I mean, go on.
I don't know.
Like it.
I mean, it's been a long 3 years. But all that in mind, it's really about what's the motivation. This is recession power rule number 1. We've talked about this so many times. What's the motivation? How do you keep people positive and moving forward? And just discuss with them what they're looking for in the first place, like you said, Sarah. So I find that to be the best way to go about things, no matter what the case is. And we do, as of today, right now, there's an 82.7% chance that we're going to see the Fed increase rates by another 25 basis points. This should be the last rate hike, is what we're being told. And on top of all that, and we actually discussed this today, Stace, with you, is that these rate hikes are already baked into mortgage pricing. And it's if you can articulate that clearly to clients, then they're going to want to work with you because they're going to know what you're talking about. And it's about being the knowledge broker in these situations because there is so much uncertainty. There is so much volatility. And it looks like it's really starting to chill out a bit, which is great news. So as we kind of wrap this segment up here, so I want to get your take on this. Is Jerome Powell going to put his foot in his mouth again tomorrow, or is he going to maybe calm everyone down? What's your? It seems like every time this guy talks, like they just need to like get like one of those giant canes and just pull him off the stage because it just makes the markets go all wacky. So how do you see this playing out?
He doesn't know any other way. He's going to put his foot in his mouth. I don't, that's just what they do. So I think the market's definitely going to react. It's going to be a little bit of bumpy week, but it's going to level out. I think the initial reaction, might affect the stock markets slightly. I mean, obviously, we haven't seen any dramatic dips in the markets, and they do rebound. So, but definitely going to put his foot in his mouth, and he might even allude to another rate hike coming because they're not happy with the inflation rate. I think they have to signal that to act like they're working on behalf of the American people to bring the costs of living down, the cost of goods down. But it's going to be hard for them to achieve that goal.
Yeah, I agree. I mean, I think he will put his foot in his mouth a little bit there, and but ultimately, we're kind of prepped for what is coming, and I don't think it'll have a major impact.
Yeah, so every time this guy talks, it just he has like this like need to be like so tough on inflation, and I know he's obviously being instructed by the elected officials what to do. Like that's unfortunately how these guys and women work. My hope is he comes out and says, "Hey, things are going in the right direction." I don't know why they want unemployment to go higher, but they do. And there's that theory out there that once the rental data comes in, that's 18 months lagged and shows that rentals have come down a little bit, that could bring inflation down dramatically from where it is right now. So my hope is he doesn't go out there trying to be a tough guy. I think that's the goal for these next couple of days. And if it plays out like that, it's going to benefit a lot of people. So I would anticipate rates are stable. The Fed's going to do what they're going to do. We're in the beginning of May right now, so for all the real estate agents listening, I would figure out what they're saying, articulate it clearly so that it's not going to cause a lot of fear-based decision-making from your clients, because even when we had our mastermind meeting today, a lot of people, they think automatically like the Fed is the one that increases the rates, and it's just not true. Or they hear this like story of like, oh, did you see what Chairman Powell said? And then all of a sudden like the world's ending. And so understand what he's saying and be able to articulate to your clients in terms they can understand. I think that's probably the most important takeaway for real estate agents.
Agreed. Yeah.
So let's hope he doesn't talk like a lot of things I can't say on the radio. We're going to take a quick break. We're going to come back. We're going to talk about the LLPA, this controversial new fee structure sort of coming from Fannie Mae and Freddie Mac. This is Toole Time, Real Estate Radio on WWDB 860 AM.
When you're getting a mortgage, you shouldn't have to sacrifice great service just to get a great rate. At Mortgage America, we've been lending with this philosophy for over 35 years. We have access to great low rates without the complications and delays of big or online banks. We're a local Pennsylvania lender with loan officers that you can actually meet. As PHFA's #1 lender, we specialize in all residential mortgage programs, including first-time buyer programs and low down payment options. For your free pre-approval, call us at 610-439-8000 or apply online at mymortgageamerica.com.
Mortgage America is equal housing lender, NMLS 12850.
The Tom Toole Sales Group is the #1 RE/MAX team in Pennsylvania with over $165 million in volume for 2021. I'm Tom Toole, and our team has achieved that kind of success by being a great place to work with and to work for. No one knows Greater Philly better than we do. We know real estate, but more importantly, we're real people. We hire the best agents, and we give them all the tools to succeed. Even our brand new agents sell 17 to 24 homes a year because our team delivers the best experience in real estate. Teams deliver a better experience than individuals, and we're a top 1% real estate team in the country. We call it AAA service. We're your advocate, ally, and advisor. Because this isn't a transaction to us. It's a relationship. If you're buying or selling a home, call the Tom Toole Sales Group at RE/MAX main line at 610-692-6976 or visit tomtoole.com. That's tomtoole.com. Sell your home for more, and remember the real estate golden rule. You always get more when you work with Tom Toole.
For the best local mortgage service and great rates on your money, look no further than Mortgage America. We have been operating in the greater Philadelphia area for 40 years with a focus on smooth, easy access to home purchasing. Whether you're a first-time buyer, upsizing or downsizing, or just refinancing, we have programs for you. We also have closing cost assistance programs and access to subsidized interest rates. Pre-approval is free, no costs or commitments. To learn more, visit our website at mymortgageamerica.com or give us a call at 610-439-8000. We always have a person available to take your call with around-the-clock human service. Purchase your home with the personalized local service you find at Mortgage America.
Mortgage America is an equal housing lender. NMLS 128501.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit tomtoole.com. Join our team, the Tom Toole Sales Group at RE/MAX Main Line. Welcome back to Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole, she's Sarah Tymon, she's Stacey Mitchell. We all work with the Tom Toole Sales Group at RE/MAX Main Line, the number one RE/MAX team in Pennsylvania since 2018, number 11 team in the United States. We have Nick Wolf behind the camera, and we're streaming live every single week thanks to Nick's excellent work on Facebook, YouTube, Instagram. Just look up Tom Toole Sales Group. Make sure to follow, like, share it with somebody. Get the word out about what's really happening in the real estate market. So speaking of what's really happening, this story has a life of its own at this point. The LLPA. So if you don't know what the LLPA is, it's the Federal Housing Finance Agencies. It's called Loan Level Pricing Adjustments, and it's around fees that are being charged by Fannie Mae and Freddie Mac on conventional and conforming loans. And it's basically, the short of it is, a bunch of news networks, list them all, because they all did a horrible job reporting this, said, oh, there's these new changes taking effect May 1st. You know when this got announced, Sarah?
Wasn't it last year?
January 1st.
Oh.
Close enough. Very close to last year. 5 months ago. And it's been around there, and what it is, and we're going to actually tell agents what you actually need to know about this, because it's a question. How many times you gotten a question about this before we get into it?
Prior to last week, never. And last week, twice.
Right?
When it made its rounds on social media.
Yeah.
That's when the questions started coming.
And it was like Fox News, CNN, MSNBC. I mean, they just it made it sound like, oh, they're tacking on fees for people that have good credit. That was the story. Was that kind of what you heard? Like, what did people tell you about this? I want to hear verbatim, and then we're going to debunk it all and explain it. You're smiling, so you must have something good.
Well, and I know this isn't like a political show or anything like that,
No.
but very quickly, I got multiple people saying, Biden, this is Biden's law. What's it, you know what I mean?
That's what happens.
Yeah.
Yeah, the initial reaction for most people that I spoke to was, why should I be penalized?
Right.
Why should I be penalized for doing the right thing, for keeping my credit good and, from paying my bills on time? Why should I be penalized? So, and that's what kind of was circulating on social media everywhere. It was on Instagram, Facebook. I mean, all of them across the board. So that's the information that most people were getting.
So on those 2 points, I would guarantee you President Biden has no idea what this is about.
Right.
I mean, he has no clue. And to your point, Stacey, I think people do feel like, oh, well, now I'm getting penalized for paying my bills on time, for building good credit, for making strong financial decisions. And that was the reaction from a lot of consumers. I think, Sarah, your reaction was also right on point. So I'm glad you brought that to the table. I think a lot of people said that as well. So here's what are these fees, I think, is the first question. So on May 1st, they're making changes to the loan level pricing adjustments that have been applied to conventional loans since the Great Recession, which is basically 2012. They don't apply to first-time home buyers with qualifying income, and with some qualifications about like percentage of the area median income, and it applies to fees, not to the mortgage rate. So you're not getting a higher rate, and all of these quotes, any rate or any mortgage you got quoted was already kind of factored in before you did all this. And we just had some lenders from Mortgage America break this down for us. And last April, for certain products, they had these additional fees that go up, and then fees go up periodically on these things. So there's a chart they did, Nick. I don't know if you're able to put this up there or not, but it basically says, if there's going to be any sort of like adjustment to these fees, and they have like it all color coded, like green, yellow, red is where it really hurts. But the funny thing is, when you look at this chart, it's only in people that are putting between 15 and 19.99% down, which have you ever seen? How many buyers have you had put down 15%?
Actually, I've had a few, but not a ton.
Yeah, I would say it's probably the least of the 0, 3, 5, 10, 15, 20. Like 15 is like, the least common, right?
Because there's like not a huge benefit to it. You know what I mean?
Mm-hmm.
It's because like the 10% shows that you're like a serious buyer, but maybe you don't have the cash to do the full 20%. At the 20%, you're getting rid of the PMI. I mean, loan structure dependent. 3%, you're scraping and you're just trying to get in. The 15%, you don't have a major benefit with the exception of, yes, it does lower your monthly payment a little bit, but there isn't like a huge standout perk there.
Right.
Except, looking at LTV and, having more wiggle room on appraisal there, but.
Right. But especially if the buyers want to keep a little bit of money in their pocket to do repairs and updates to the home, then there's really no reason for them to do the 15. It is a weird number.
Yeah. What's also interesting here, though, as you're looking at the chart, so you've got reds, your higher LLPAs, greens, your lower, yellows right in the middle. I'd say a good portion of this chart is yellow to like slight orange or like slight green. Like there isn't like, yes, there's only 2 blocks in the whole chart that are like full out on the higher end there. And then you've got some like, reddish orangey ones. But like a lot of these, like yellow's essentially like not any real change there, right?
No, it's actually it's in favor.
Okay.
So I mean, it's because they're giving us a positive and a negative here. That's why we're going to put the chart up on the recording. And what was said here, and this was by I'm not sure who quoted this here, but they called it the cheat code is between 15 and 20% because that's where the steepest fee hikes are for people that are putting just under 20% down. So and you can coach your agents through it, or not your agents. We'll coach our agents. You want to coach your clients through it and let them know all this. In the past, loan originators were able to save buyers money by recommending they put just less than 20% down and paying a little PMI because rates were lower. They could keep that cash in hand. But now it's that's not really the case. And I think this is the reason why you got to talk to a lender. I mean, this is like number one, not to use an internet lender.
Oh, gosh, yes. Please don't use an internet lender.
Stacey hates them.
I do. Yeah. You can never get a hold of them ever, especially when it matters the most. Evenings and weekends. So do yourself a favor, talk to a local lender. But also, these are not any additional fees. It's not like charges, additional fees tacked on. And these have already been included into whatever your mortgage is now. So
yeah. And I mean, my other this is kind of like common sense, but like, stay in your own lane, right? Like, look at what this does for you specifically, and don't worry about other categories, credit scores, and what they're maybe, getting or losing or whatever. Like, worry about you, because that's what matters.
I mean, a good credit score is going to get you
way further in life.
Way further in life. You're going to get better rates on your car insurance, your homeowner's insurance, all that stuff. So, don't
plummet it for
yeah.
Right. Don't throw a wrench in it because of this.
Right.
That's for sure. Continue on your track. Yep.
Yeah.
And get the house.
Right.
No matter what.
So there's a second part to this story. So everyone's freaking out about this, right? Well, now we got our friends in Washington involved. So get ready to talk about the story for the next 5 years on the radio show here. We'll be here. I don't know about some of these people that are doing this. So there's a group of lawmakers in the U.S. House of Representatives led by Representative Andy Biggs from Arizona, and they introduced a bill would block the changes for the loan level price adjustment fees charged by Fannie Mae and Freddie Mac on these mortgages. They're calling it the Responsible Borrower Protection Act of 2023, and it would cancel these proposed changes to credit fees by the FNMA and the Federal Home Loan Mortgage Corporation. So are you surprised this is happening? Tell me more about your reaction to this. Do you think there's any legs to this bill? Will this get passed and will this get blocked, or what do you think?
Everything they do is for a reason, a political reason. So this was only brought about because of all the hay that was made last in the past couple of weeks. So, on both sides. And this is for both sides of everything. This is just what our lawmakers do. So they're going to introduce this bill to act like they're actually doing something, to make this different. It's not, even if it passes in the House, it's not going to pass the Senate. Like, they're not going to be able to do anything. It's a stalemate. So, and that's kind of always what Washington is.
And then we're just going to have to hear about it.
Yeah, and it's, they need to focus on the debt ceiling and how we get past that. Like, I think there's way more urgent things to focus on than this, but,
Well, and, I know that there's so much going on, right? So, you can't get ahead of everything. I think there's a lot of, putting out fires and, having to deal with, the issue at hand right in that moment. But it is interesting that, I wonder how far back they were thinking about this, or, did they just, scramble together here? This all, hit all the headlines, and then they're like, ooh, let's go, Or was there, a lot of, because, again, we've known about this initially came out January 1st. So it's just interesting.
I personally don't think anything would have been made of it had it not circulated around social media.
Yeah. Well, it was already in place.
It was already, right.
I mean, you look at the Mortgage News Daily article, which was the one article that gave it a very clear, here's what's going on. It was dated in March.
Yeah.
And what I have a hard time with is I appreciate that I can get why people are feeling like this is, people are getting punished financially, and the agenda of equity over equality. This is all the stuff coming out of the U.S. House of Representatives. So you got to love when they go this way about mortgage lending fees. I mean, it's typical, to say the least. I think this might get passed, but I bet the president vetoes it, because they don't have enough power in the Senate and the House to overturn a veto. That's just my prediction.
So you think it would pass through the Senate too?
Maybe.
Okay. And if it did, he would just be like.
I mean, I don't think it's going to go anywhere, unfortunately.
Right.
That's the challenge. And it kind of reminds me of when they were trying to pass those COVID bills, and then real estate getting shot down time after time. Yep. Thanks to Governor Wolf. Appreciate you, man. It was real. 3 years. Thank you. So it's one of those things. It's almost like a non-story at this point. And what it really demonstrates, you two know how to handle this stuff. There's going to be real estate agents that hear this, and they're going to start hemming and hawing and not know what to say, and they're going to lose clients because they can't articulate this properly. Is that an accurate statement?
Yes. Mm-hmm.
So what advice do you have for real estate agents that are listening, how to deal with the LLPA, what the heck is going on question that you're invariably going to get from people?
I mean, I think the shortest, quickest answer without having to, even know all of the ins and outs of it would be, hey, great question. Why don't I put you in touch with a lender, and let's find out exactly what this means for you.
Love it.
Could not agree more.
And then, whether or not they fully understand all the different pieces of it and, whatnot, just have them reach out to the lender and find out for them specifically, because, they probably don't care about how it's affecting everyone else or all the different scenarios.
Not even close.
You care about what this is going to do for you.
Mm-hmm.
Agreed.
Well said.
I feel like the only time that you care about the others is if you get that clickbait of if you have better credit, you're paying more, and lower credit, you're paying less, and now you're paying to cover, and then you might be like, well, what is this? But yeah, just find out what it means for you.
Mm-hmm.
Love it. Well said. So I hope everyone's watching that. We're going to turn that into a clip. I mean, it's literally exactly how you'd want to handle that objection. So kind of a story, non-story here. So we're going to take a quick break. We're going to come back, and we've got something very interesting to talk about, that there's an increasing popularity of mortgage points according to a Zillow analysis. And the reason I want to discuss this is how you can use that to your advantage as a real estate agent in talking about affordability and monthly payments and all the things we're talking about here. because you've got to have an understanding of that and someone you can work with. So we'll unpack that next on Tool Time Real Estate Radio on WWDB 860 AM.
You shouldn't have to deal with all the red tape when getting your mortgage from a big or online bank. At Mortgage America, we have access to big bank money, but with the personalized and detailed service of a local bank. We are here in your community and ready to serve with fast settlements, low down payment options, and first-time homebuyer programs. Pre-approval is free, no costs or commitments. For more information, visit our website at mymortgageamerica.com or give us a call at 610-439-8000.
Mortgage America's equal housing lender, NMLS 128501.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit TomToole.com. Join our team, the Tom Toole Sales Group at RE/MAX Main Line.
I'm Tom Toole of the Tom Toole Sales Group at RE/MAX Main Line. If you're thinking of becoming a real estate agent in the greater Philly area, I have a special offer for you. Our team did $165 million of volume in 2021, making us the #1 RE/MAX team in Pennsylvania and a top 1% team nationally. Our agents love us because we offer them a successful career, a great life, and an unbeatable culture. Agents who've been with us for at least a year average 30-plus sales. Even our brand new agents average 17 to 24 sales a year. We offer proven systems and expert training. We help you set more appointments and sell more houses. Now, here's the offer. If you don't have a real estate license yet, we offer real estate scholarships so you can get one for free. Check it out at realestatescholarshipprogram.com or visit the Tom Toole Sales Group at RE/MAX Main Line at tomtoole.com. That's tomtoole.com. Get more out of your real estate career, and remember the real estate golden rule. You always get more when you work with Tom Toole.
When you're getting a mortgage, you shouldn't have to sacrifice great service just to get a great rate. At Mortgage America, we've been lending with this philosophy for over 35 years. We have access to great low rates without the complications and delays of big or online banks. We're a local Pennsylvania lender with loan officers that you can actually meet. As PHFA's #1 lender, we specialize in all residential mortgage programs, including first-time buyer programs and low down payment options. For your free pre-approval, call us at 610-439-8000 or apply online at mymortgageamerica.com. Mortgage America's equal housing lender, NMLS 128501.
All right. Welcome back to Tool Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Stacey Mitchell. She's Sarah Tymon. We have Nick Wolf behind the camera, and we all work at the Tom Toole Sales Group at RE/MAX Main Line, the #1 RE/MAX team in Pennsylvania since 2018, number 11 in the country, and we're streaming live every single week on Facebook, YouTube, and Instagram. Just look up Tom Toole Sales Group. So a Zillow analysis came out, and I found this to be one of those fascinating things that some agents are going to stick their head in the ground like an ostrich and totally ignore, and others are going to use this to their advantage to actually go out and help people. So it's new research from Zillow Home Loans, and it shows 15% more home buyers purchased mortgage points in 2022 to reduce their monthly payments. And, I mean, it's a pretty staggering number when you look at it, because we know rates went up. They were up in the 7% range, and affordability was a big concern. You heard this from a lot of people, right? Mm-hmm. So when you hear affordability, what were some of the complaints people had last year and even going into this year? But more importantly, last year, because it was that culture sticker shock of not dealing with 3% rates anymore.
Yeah, I mean, I would say the people that really had the hardest time with it were individuals who'd been searching for a little bit and saw buyer estimated cost sheets and breakdowns of monthly payments at those lower rates. And as the rates went up, just seeing, because if you enter the market at the higher rate, you didn't see the other rate, Mm-hmm. So I think they kind of had the toughest time with it. And then depending on what time it was in the year there, then they had an even tougher time with it when they kept going up.
And then they saw their buying power be greatly reduced.
Mm-hmm.
So if they were looking at $450,000 homes and the interest rates went up while they were searching,
mm-hmm.
Then they can't afford that $450,000 home anymore.
Right. Yeah.
Yeah. It's kind of like a buzzkill for them.
Yeah.
Yeah. I mean, they were having enough time in a competitive market as it is. So, I mean, some people, the idea of moving might have gone away. I mean, that's the reality of what was going on here. So, So this news dropped on April 26th, and the data from the Home Mortgage Disclosure Act. So it comes right from the actual loans being funded. Nearly 45% of conventional primary home borrowers purchase points to reduce their payments. And, you look at just the previous year, it was 29.6 in 2021, 28.4 in 2020, and 27.3 in 2019. So it looks like the number's been, bouncing around 27 to 30%. And then seeing that massive bump, an additional 15% of people, that tells you one of the pain points in the current market. So, and there was also borrowers, I found this really interesting. They opted for a cash-out refinance loan, so a conventional loan for a primary home. They bought even more points. They bought out 57.8% of those borrowers purchased points compared to like 48.5% and 44% and 41% in 21, 20, and 19, respectively. So if you don't know what mortgage points are, they're also called discount points, and they're an option for buyers to pay an upfront fee to buy down the interest rate on a loan. And it's the point, like 1 point would be 1% of the loan amount, just so everyone kind of gets that. So are you guys surprised by this data? I think that's kind of my first question here.
No, not really. I think that it was definitely an option that was proposed to clients, and they thought that for them it made sense. Now, it might not be for everybody, but for those folks that chose to do it, it must have made sense for them to take that initiative and buy down the points.
Right. And I mean, what's nice about the, when you're working with your lender, you can ask, like, give me the numbers here. See how much, like, what the level of savings is, and if it's worthwhile to do or not, because they can put that together for you very quickly.
Well, and I think it's also depending on how long you're going to be in the property, if it makes sense. Like, if you're going to be in a home 20 years, it probably makes sense to spend the points. If you're going to be in there maybe 5 or 3 years or something like that, maybe not. So, so it's a percentage of the borrower's loan amount. Did you guys have anyone personally, any of your clients, buy points or do any of this stuff last year when we saw the rates kind of get very volatile towards the second half of the year?
I don't think I had any clients do that.
I think we did it.
Did you?
Yeah.
Well, so explain that the situation you had, because you had a different type of loan. It was a construction loan.
Yeah.
And I mean, it wasn't your traditional, like, conventional 30-year down property. So explain that, because it does make sense in some cases. And I know you plan to be in that property a very long time, so that has another thing to do with it.
So we with the way the construction loan, the way it went, we purchased the home, settled on it. Then it flipped over, and we had to complete all of the construction on the home. And it was going to, like, at the completion of that work is when we would actually get locked in to our 30-year rate. So during the course of time from when we went under contract till even we, like, did our first settlement, and then from that through the project, we were just watching the rates just going up. And we were like, oh boy. So I think, Eric, my husband, like, is a numbers guy. He was running the numbers. He was talking to Mortgage America. They were figuring everything out, and then I think ultimately we did decide to buy down.
Smart. Well, I mean, and again, you're going to be in there a long time. It's probably saving you a lot of money, and there's always like that number where you get to where, okay, if I pay the point here, I get to this payment, it's a break even because I already saved the amount of money that I'm going to save. So, to me, the people that are, if you find a home you like, and knowing, like you talked about earlier, Stacey and Sarah, like, hey, your budget just got decreased because rates went up, right? So that's a tough pill to swallow for a lot of people. And I think this is another option that's out there, especially if they're cash heavy. Maybe they're getting a gift from a family member or something like that. So buying points is definitely more common than it used to be. And what they found in this survey is borrowers who make less than the median income for their area, between 30 and 50%, are more likely to take advantage of this option, as they're the most likely to be concerned about their payments. I think that makes a lot of sense. So how do you discuss this with people? So you guys haven't had anybody actually do it. I know there's like a break-even calculator you can use to show how that works. There's also the 2-1 buy down, which is basically if you can negotiate some seller's assist and you use that money to temporarily buy down the rate. Did you have anyone use a 2-1 buy down last year?
When I had the listing, we accepted an offer with a 2-1 buy down.
Okay. How much was the listing?
$475.
Okay.
I think.
And so if you don't know what a 2-1 buy down is, you buy the rate down two percentage points the first year and then 1 percentage point the second year, and then it goes up to the rate you were getting quoted in the third year. When did this happen? I'm curious because I want to look at where rates were when this home went under contract.
So I want to say January-ish.
Okay. And that's where rates were. I mean, they were in this like weird spot where it was close to 7, then they came down to like high 5s at the end of January for like a day, and they went right back up again. So
Or actually, wait, no, I think we settled in January.
okay, that makes
So we
way more
went
sense.
into-
So it's probably like November.
Yeah.
What's the address?
I'm just like I'm drawing a blank. Hold on, let me look in here.
Put
So-
Sarah on the spot here.
So as far as the 2-1 buy down, how does that look on an Alta sheet?
So it goes
how does
in
that?
when the Alta, I don't know, when the contract it went in as a seller's assist. But I
Okay.
think that they went over, like they went higher up on their price to
get the
ask
assist?
for the assist.
And is
Yeah.
it just a dollar amount, the
Yes.
assist?
Yeah, but then they
Okay.
provided a form too that showed exactly how the breakdown was happening.
Okay.
It was the one in Wynwood.
Okay, got it. All right. So the point is that definitely went under contract right towards the end of the year. So I mean, why don't you pull up the loop there? We can take a look at this. How it would look on the sheet, Stacey? And this is a great question. Is you're gonna have your seller's assist there, but then you're charged the fee. So it's almost like a zero out.
Do you want to see the Alta?
Yeah, I would love to see the Alta.
It's a little grainy.
I can see that here, but we're not going to put the Alta up. So yeah, so you get the credit for the seller assist, and then there's a fee charge. So basically nets out as a zero. So you have a debit and a credit, or a negative and a positive, and then that gets paid to the mortgage company. And because it doesn't make sense for the buyer to finance this, you got to negotiate it from the seller, or it's you're paying. It's just a trade off. So
Okay.
and where that makes sense, I think rates got to be at a certain rate. So when did this home go under contract again? I mean, because I know that you had a deal blowout on it and some other stuff. I just want to give people some clarity on where it makes sense to maybe pay points. My guess would be it's probably like November when rates were in the 7s. This is or maybe
That's kind of when we were seeing the higher rates at that point.
Where's our date?
what's the date on the initial there?
12-2.
December 2nd.
Okay.
Yep.
So let's look this up. December 2nd, 2022 mortgage rates.
They put it in on 12-1.
So
put in the
So rates were coming in close to 7 at that point. So
Okay.
that makes a lot of
totally
sense
makes sense.
and also on this, I mean, and then what happened? It allows you to grow into your mortgage payment, and then you have the ability to refinance if rates ever do come down. So you're just kind of buying yourself some time there, and that can be another way for people to get into properties. So I think it makes sense to really assess this with your lender, look at your affordability. How are let's talk about how we coach agents into this, or not coach agents, coach clients into this stuff. I mean, do we want to like how would you do that, Stacey? So you know that here's one option. They're not happy with the rate. They want the house. Affordability is a concern. How would you break it down for your clients so that they can understand this and see what their options are?
So, the most important thing is to go through the whole entire buying process so that your clients have a real clear understanding of what to expect, and then offer the information that you would know about, your lenders, the mortgage process. But this is something well beyond my scope, so I would definitely encourage them to talk to, a local lender who can help them through this process. And like Sarah said, put together some sheets, cost sheets. The lenders can do that. We can do that too. We can do it with what it's going to look like with a seller assist. So that way they can see, exactly what it's going to take for them to get into the home. You can work with different down payments, like we just talked about, the 5%, 10%, 15%, what's going to work best for them. And then they'll be able to get a really clear idea of their monthly payment and what that looks like with prorated taxes. Because that's the thing that people have to take into account too. What are the property taxes on a house?
Yeah.
That can make a big difference. If you're dealing with property taxes of $10,000 as opposed to $5,000.
Yep.
That's going to make or break people.
Yeah.
And I know that some people are, when they do find out what taxes are in certain properties, they're like in shock.
Right.
So, sometimes you have to toss them aside and move on to something else.
And then you think that's bad, and then tell them about Jersey taxes.
Yeah.
And all of a sudden,
Exactly, right,
it's pretty sweet. It is funny when you get buyers that are coming in from like New York or New Jersey, and they're just like, even in the areas that have like for our surrounding area here, like the higher taxes, they're like, this is phenomenal.
They're like, this is great, right?
Yeah.
It is funny.
I mean, I think it works well too for we often talk about like growing into your home or, some of the like, ways you can do that. And, moving does cost money. And there are almost always going to be some costs that you have upon getting into that new house. Maybe it's furnishing it. Maybe it's doing repairs. Maybe it's doing, it could be any number of things that you might know for the first year or two, it's going to be a little bit of a tight squeeze, and that ultimately you're going to be able to, make this work and whatnot. But having that little bit of extra wiggle room for those first 2 years is probably the most important time to get a little bit of a break.
I think that's so important, Sarah, because it always happens. No matter what, no fail, something's going to happen when you get into the house. I just had buyers who closed a couple of months ago, and they called me and they wanted to know about their home warranty, which they did not have. But they wanted to know if their home warranty covered their hot water heater that just died. So, I mean, it's a no fail. Something's going to happen.
Yep.
The hot water heater is going to go. There's going to be a plumbing issue, electrical issue, whatever. The roof's going to start leaking something. But that's what it is when you own a home.
Ownership.
It's like when you own a
Well
car.
said.
You're going to have to get new tires.
Right.
You're going to have to replace your wiper blades and get it inspected. Just the same thing with a home. So it's not that, just put away money, have something set aside for those emergencies because they will happen.
Mm-hmm.
I think that's really well said because when you get into these situations, you've got to look at, okay, what's the long-term benefit here? How do we need to break this down? And like you said, I mean, there's things that happen, right? And if you can grow into it and you get a little bit of a break, because you got to buy like furniture. I mean, it's expensive moving, and people forget they don't factor in these things. I mean, did you have enough furniture for your new house when you moved in? We sure as heck didn't.
Yeah, no, my mom kept trying to bring down.
Yeah, but you don't want that stuff.
No,
yeah.
I don't want that stuff. I had to keep telling her, like, take it away. Like, I'd rather have nothing. But there was, I mean, there still is stuff areas that could use some more furniture. We're going with a minimalist style at the moment.
A lot of people do that though when they upsize, right? I mean, we're in the same boat. I mean, we moved almost 3 years ago, so it's not like it's anything different there. And what folks don't realize is all the costs involved. Like, and you want to paint the house, right? Like, that's not free. You want to. I'm not even talking about big renovations, just making it look the way you want to. Or landscaping, right? Like most people, their landscaping's all messed up. So this is a really smart thing to do. And Stacey, I don't know if you said this. What I would do is I would show them, all right, here's your cost with points, here's your cost without points. And then I would just literally circle the cash to close and the down payment on each one and say, which one do you like the best? And that's after obviously confirming everything with the lender. And that's going to help people make a better financial decision, because when folks have options, they feel better about pulling the trigger on something than you got to waive everything and pay $200,000 above the asking price. That's getting a little old for a lot of folks. So I think this is another tool in an agent toolbox they can use to help get people to say yes on properties that maybe they're a little hesitant on in the first place.
Right, and it gives them a sense of control that they get to at least pick some aspects of what's going on here.
I agree.
So are you going to start using this more? You're going to start talking when people are complaining about the monthly payment or rates are too high. Is this something you're going to broach them, especially those cash-heavy buyers that are out there?
Yeah, I think honestly, I think it's a great option. If somebody starts complaining about the mortgage rates being too high, that's a solution to their problem. Yeah. Isn't that what we're here for? Offering
Bingo.
solutions?
Yep.
Yeah.
Love it. All right, that's it for this week's episode of Tool Time Real Estate Radio. You want to follow Stacey? She's on Instagram at the number 2 Mitchco, Mitchco. You can follow Sarah on Instagram. She's at Ty_Ty_Time, TY_TYTIME. You can follow me at Tom Toole 3rd, at Tom Toole 3RD. And again, we stream live every single week on Facebook, YouTube, and Instagram. Just look up Tom Toole Sales Group. We'll be back next week on Tool Time Real Estate Radio on WWDB 860 AM.